Tuesday, January 23rd, 2024, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at Japan. It looks like the Bank of Japan wants to really trash or continue to trash the yen. And I think there's a danger of a melt-up in Japanese assets. And what do I mean by that? Well, we're going to look at the Nikkei. It's looking really interesting. And a melt-up is just a collapse of the currency versus real things. And we saw some years ago that even in Venezuela, which has been a basket case, when their hyperinflation started, the Caracas stock market index was one of the best performing indices back then. But it didn't mean anything. It didn't mean that the economy was strong enough or was strong at all. Before we look a little deeper into Japan and the Bank of Japan, I just wanted to let you know, especially my viewers here in the UK, that I've heard and actually contacted the Royal Mint, and they're stopping the service. Well, they've stopped about a month ago. They won't be storing physical metals anymore for clients. And what does that mean? I'm not sure why they're stopping the storage of gold and silver. What they're still doing, though, is if you go to their website and buy sovereigns, for example, and leave it there, they'll store it for you. But if you have it delivered and then ask them again to store it, they're not doing that service anymore. And Oliver Temple from Gold Investments, my precious metals dealer affiliate, who I've been dealing with personally for over 20 years, he let me know about that, and he wanted to let you know as well that they have their own private vaults, Gold Investments. So if you're in the situation where the Royal Mint has contacted you and you have to take your metals out of there, yeah, check out Gold Investments. All the details are below in the description of how you can get in touch with them. And I'm sure Oliver and Simon can work out a good deal for you if you're looking to, store your gold and silver with them in a private vault. From what he told me, they're charging about $4 a year, or sorry, £4 a year for each ounce of gold. But you can probably work something out with Oliver. So yeah, let Oliver know that I sent you there, Monaco 64 or Mario. That should help you as well. So back to Japan. And of course, I've been covering Japan for many years. Why is that? Why does Japan matter and the Japanese yen? Well, because it's one of the major fiat currencies out there. It provides a lot of liquidity to the market. There's the old Japanese yen carry trade that has really helped this fiat currency, not just in Japan, but throughout the West in the dollar system, stay afloat. And why is that? Well, because the Japanese have been kind of pioneers with money printing, or QE. They've kept rates at zero, or well, now they're even negative for decades on end. And they've been able to really trash the yen, especially since 2013 with Abenomics. And what this policy of easy money does for Japan is that, well, it keeps their exports very cheap. But at the same time, though, it keeps their imports expensive because Japan doesn't have that many resources, that much resources, so they have to import a lot of raw materials. And I would venture to say that there is no deflation in Japan, really. There might be some prices that are, how can I say, dropping once in a while. But as you know, deflation and inflation in the classical sense is the creation or destruction of currency and credit, right? Deflation being the destruction of currency and credit, and inflation, of course, being the creation of currency and credit. That could result in rising prices of some goods and services or of assets. So we've been told, of course, that Japan has had a few lost decades. Of course, the Japanese economy was booming in the 80s. It was like the US or, the tech sector nowadays. People thought, we need to learn from the Japanese, it was all the rage. Japan in the 80s, especially late 80s, we saw that, for example, the land on which the Japanese imperial palace was or is in Tokyo was valued at more than the whole real estate. The whole of California real estate. It was crazy. It was a massive bubble. The Nikkei reached almost 40,000 in December of 1989. And we're going to look at the Nikkei. Of course, it dropped massively for years. Real estate in Japan collapsed by, I think, 90%. It's been really bad, and the Bank of Japan has been pushing on the string. But the consequence of all this policy of QE, easy money, has been a massive rise in the national debt to up to like 300% of GDP. That's the government debt. And the Bank of Japan now owns probably more than 50%. I think I could be wrong, but owns more than 50% of the debt. And they just met today for the first time in 2024. I think is the first meeting for a major central bank. And guess what? They decided to keep their base rate at negative 0.1. I know it's not much, but it's still a lot. And their excuse is that they're concerned that inflation, as they look at CPI, is under threat. And for them, under threat means that it's going to zero or going to be negative. I mean, why would the Japanese public be worried about negative or even zero cost of living rises? It would give their currency more strength. They'd be able to buy more. While the reason the Bank of Japan and the elite in Japan, the bankers, are worried because as I've said many times before, in this fiat currency system, you need to keep the debt going, and that's what it's all about. They're horrified of, allowing prices to drop because it means that the debt mountain could collapse. They need to keep the Japanese public borrowing and spending. But just look at what the Japanese, in particular the Bank of Japan, is worried about. They're worried that we're going to go back down to zero in CPI, even though CPI has been mostly above 3 and even above 4% in the last couple of years or so. So it's all nonsensical, in my opinion. But the people who are going to suffer, as usual, are the general public. The people at the bottom of the economic pyramid, so to speak. Pensioners in Japan. There's a lot of pensioners, retired people in Japan. Their income, their fixed income, is not going to keep up with the collapse of their currency or the debasement of the yen. And I've shown you many times this chart of the price of gold in Japanese yen. I mean, the Japanese yen is one of the worst performing fiat currencies of the last 10 years or so. But someone sent me about a week ago a chart of the Nikkei because I hadn't been following the Nikkei. I mean, I traded quite a bit of Nikkei futures in the 90s, even though my core business was bonds. I had some big funds in Italy, mutual funds that were my clients. The fund managers there, you know, they had the bond fund manager, but I also spoke to the equity sector fund managers, and they did a lot of Nikkei. So I remember trading a lot of Nikkei futures. So I wanted to show you this chart. It's a monthly chart going back to the early 80s, and you can see the 1980s boom in the Japanese market, the Nikkei. As you can see, it topped in December of 1989 at 38,957 yen. Yes, that's the key number there. And it bottomed back in, let's see, 2008, October. It went down as far as almost 7,000. So it was a huge drop, and it was, how can I say, a long protected bear market, but we're still in a bear market until we break above that December 1989 high, and it's sneaking up on us. And look at how it's, you know, gone up so much already in January, from like below 34,000 to above 36,000. So is this a sign of a healthy economy? I don't think so. This could be a sign of a melt-up or a crack-up boom, as von Mises called it, or hyperinflation. So that's why it's really important to look at that 39,000 level. I guess if we trade above 39,000, it's a new all-time high. And we could see, you know, this is a huge number because it's been standing for how long? Almost 34 years. So you can bet that we could see an explosion upwards, and it kind of corresponds to what's going on in the US markets with the NASDAQ and the S&P. They're also near all-time highs, and believe me, this is not a sign of a healthy economy. It's a sign of inflation, and I don't think it's going to get better. Do I worry about the stock market? Not much, because I don't have much of an exposure to the stock market. I did an interview yesterday with Claudio Grass of Switzerland. I recommend you watch that. I'll put it up in the cards, and yeah, up in the cards, and you can click on it and watch it. And he was saying that, and I agree with him, that owning real things, property, gold, silver, whatever you like as hard assets, is the only way to survive this coming hyperinflation. And I've said many times that Japan is probably going to be the first one, you know, the Japanese yen, because if you read here the announcement from today, it doesn't make any sense. This is from CNBC. Bank of Japan retains its ultra loose policy, trims core inflation forecast. So their excuse to this ultra loose policy, despite the fact that Japanese savers are getting a negative real rate of return on their currency, is that they're concerned that you know, CPI is going to go back to zero, even though it's nowhere near zero, right? And this is what I thought was weird here. It says Japan's core CPI slowed to 2.3% in December, easing pressure on the BOJ to normalize its policy. Well, normalize its policy, of course, means raising interest rates. I mean, rates should be 3 to 4% in Japan, not minus 0.1. Though this print has stayed above the BOJ's stated 2% target for 21 straight months now. So does it make any sense to you that CPI has been above 2% for 21 months and still they're worried about CPI going below 2% and that it's bad for for things? I mean, it makes no sense whatsoever. So yeah, when is this going to happen? Well, it can happen very quickly. The melt up or the hyperinflation or the crack up boom. The problem is for those who are not prepared, once it happens, it's very, very difficult to protect yourself. And I'm not here to tell you what to do, but just to tell you what could happen. If I had to say something to you, is that have something outside the system. Yes, like hard assets, like I just said, like Claudio Grass said in the interview I posted yesterday, and that's why I recommend you watch that. And this is not just isolated for Japan. It's going to come to the UK, to Western Europe, to the US especially. So, yeah, let's look at the markets then this morning, see where they are. It's 8:20 a.m. London time. We've got spot gold trading at 2030. It's up about $9. High's been 38, the low's been 19. Silver's up 23 cents or up 1%, 22.31. The high's been 45, the low has been 03. Dow futures down 18, NASDAQ is down 8, S&P is unchanged. To the currencies, sterling is up 0.2%, 127.33. The euro's up 0.2 as well, 109.03. The dollar is actually down now 0.5% versus the yen at 147.38. The high though in the dollar has been 148.57. I expect this is just a blip. I expect the yen to keep dropping or the dollar to keep rising here. Dollar is down 0.2 versus the Swiss franc at 86.72, and the dollar's back below 720 versus the yuan. It's at 717. The other currencies here, we got the Aussie dollar up 0.4%, just below 66. The dollar is unchanged versus the Canadian dollar, 134.68, and the Kiwi dollar is up 0.33%, just below 61. To the commodities, we got WTI crude up 0.25%, just below 75. Brent as well, up about 0.2, and it's just below 80, trading at 79.84. Platinum, that's up $12, trading around 907, and high-grade copper is up 0.75%, trading around 381. So what this ultra loose Japanese monetary policy does as well, it forces Japanese investors to search for yield. So they'll buy treasuries, they buy gilts, European government bonds. So it keeps our markets also liquefied here. So it's not just something about Japan. And yeah, that's what's going on too. So let's quickly look at the Treasury market. The 10-year yield is up 2 basis points, trading around 4.12. The 2-year is at 4.40, up 2 as well. And for the UK bond market, we got the 2-year yield up 4 basis points at 4.35. And yeah, with that, I'm going to wish you all a very good day. Take care. Bye.